if we've seen any signs of diffusion of tension in the Russia-Ukraine issue, probably yesterday was the first meaningful sign. Again, there could be a lot between the cup and the lip, and a lot could slip between that as well. But yeah, we did see some murmurs of that. Now, can this actually bring up risk appetite? Has some of that already been discounted? What's the impact on EMs and India in particular? What could happen to commodities? I always see no other person than Jeffrey Dennis, who's looked at EMs for such a long time in his career and still continues to bring in this morning for us and this evening for him to talk about this. Jeffrey, great having you. Good evening to you.
Good evening.
So, Jeffrey, what did you make of what looked like um, some tone of some compromise being reached on either side, if you will, or at least the market seems to be reading that way? And what do you make of it?
Well, obviously, we're going to veer pretty quickly with this question to geopolitics, which I don't really want to sort of opine on too much because I'm not an expert on that. But I think the key development today was the signs that Zelensky and Putin may actually have a meeting to possibly discuss ways in which you can, move towards some sort of an agreement to stop the war. And the market clearly reacted very well to that. Now, we've had false dawns already on this. We've had rounds of talks, albeit not at the presidential level. And I think it's too early to know for sure exactly how this all plays out. But I think, as everybody knows on the broadcast, the Russian invasion has not gone as well as Russia would have anticipated. And so they may be looking for, to use the modern vernacular, an off-ramp for President Putin. And hence the talks seem entirely plausible as a possibility. Now, what that does straight away, I think, is it takes some of the very high risk out of the market of a heightened military conflict involving NATO, heaven forbid, nuclear weapons, etc. So it is something of a relief. And obviously oil prices are down today as part of that, or were down today as part of that process. But I think we've got a long way to go before we get to that stage. And also, it's very clear to me that it's going to take many, many months, if not years, even after a settlement, for some of the most severe sanctions to be removed from Russia. And so what that means in terms of potential oil prices and given oil supplies from Russia, and of course gas supplies as well, remains to be seen. In other words, I think it's an understandable celebration by the market, but we are far from being out of the woods, particularly with respect to the geopolitics, and above all, as your intro suggested, in terms of commodity prices and in terms of commodity supplies.
Yeah, Jeffrey, these days we've seen market reactions be very stark, either on the upside and the downside in the first couple of days, and then kind of plateau out. So oil, from all the talks of it reaching 185, it's kind of fighting headwinds on the upside. It's come off again the last couple of days. But do you think these are levels around which the markets may find equilibrium, looking at demand supply, looking at the China COVID situation, and looking at the diffusion of tension? Or could there be more downside simply because of this diffusion of tension? We've had about $10-12 shaved off. Could there be more?
I mean, the trading range for Brent is since the conflict began is something between $100 and $128 per barrel. We're now about 111, so pretty close to the middle. I would be very surprised in the short term if we break down below that $100 level, simply because, as I say, it's not remotely clear how quickly the developed world, Europe in particular, will be in being able and wanting to take on board Russian oil, if you like, because of the sanctions. So I still think you've got to assume that this is a fairly constrained supply environment for oil. Now, obviously, there are other things that could go well for the price of oil, i.e. it could come down. If there is finally a revival of the Iran, U.S. nuclear accord, that will bring Iranian oil back on the market. At the same time, OPEC Plus might decide to raise output, although that's complicated by the fact that Russia is a member of OPEC plus. So I know it's not a very interesting forecast, but I think we're going to bounce around in this trading range, frankly, for a while. I would be very surprised to see a big breakout to the upside. I think if there is going to be a breakout, it's more likely to be the downside. And I think that would be driven by a combination of some sort of increase in supply. And of course, the whole impact of this Russian-Ukrainian war is at the margin going to be a net negative for global growth. And to that extent, it may well bring the price of oil down at the margin. So I think we're in a range, but I think the downside risk is probably greater than the upside risk here.
What about the markets? Is the downside risk greater than the upside risk? Equities,
No,
EM
on
and
the contrary, I think it's the other way around, and obviously oil will play a role with that. Now, what's very interesting is that the dollar, and as you know, we've talked about this many times, a strong dollar is typically bad for emerging markets. The dollar has had periods of strength during this Ukrainian-Russia conflict, but generally it stayed pretty stable. And a number of countries that are well away from the conflict, I'm thinking of Latin America here above all, have really had a very good market response in 2022, including some decent currency strength, because you haven't seen a lot of oil price, a lot of dollar increases sucking money out of the emerging markets. Now, I think what's happened, and you mentioned it yourself, we had a lot of volatility when the initial invasion occurred. And then when the news, if one can ever say it like that, and the people of Ukraine are suffering terribly, but to the extent that the news flow started to settle down a little bit, maybe the worst outcome, NATO getting involved was reduced as a possibility, the market is going to focus back, or was focusing back, and will continue to focus back on the inflation story, not just in the US, but around the world. And clearly, the oil price increase you've seen and the push up in food prices, Russia and the Ukraine account for 30% of wheat exports. So you're going to get a big push up in food prices as well as oil prices. So what that's going to do is it's going to push up and push out the peak in inflation, I think in the US is somewhere between 8 and 8.5% sometime in the late spring, early summer. And the markets have got to factor in how the central banks, and in this case, the Federal Reserve, react to that. So I think that's the factor that is there behind the scenes. Although down the road, if some of these price increases in oil in particular do slow the economy down, well, that will reduce those inflation pressures down the road. But I think the markets have reacted well. I tend to believe that if there is some sort of prospect of settlement of this war in the next, should we say, 2 to 3 months for the sake of argument, I think the markets are more likely to be up from here than down from here. But a lot depends on the geopolitics. And of course, a lot depends on how bad or how much worse these inflation numbers get than they even are today.
Jeffrey, always great to get this big picture seen from you. And thank you so much for the same today. Have a great evening.
Thank you very much. Thanks.
Our pleasure was ours. That's Jeffrey Dennis. And well, it's lovely to get this perspective. So, let's wait and watch. Remember, we did a story, BloombergQuint did a story day before yesterday on Bank Julius Baer, saying that they believe the risks are tilted on the upside for the Indian markets, though I think securities like BofA, etc., are all saying that maybe, just maybe, this is about it with crude at 110 or slightly above 110. Unless crude falls for India, the market risks are now pricing in almost, the markets are pricing in almost all positives. Well, let's wait and watch. That's a long-term conversation. Now let's quickly move. We've done about 9 minutes already. Let's try and quickly tell you all the news flows around it. So of course, remember, Russia has claimed that it will curb attacks around Kiev. Ukraine has called for security guaranteeing latest talks, and oil has dropped further. So this is the key news. Markets have reacted well very quickly. I think let's just bring up US and bring up SGX. That's it. So if you get the SGX, this is what the US markets did and did really well. And if you look at the SGX Nifty in trade, I think the SGX Nifty is indicating that there will be a start, which is very, very positive. The key is, can this continue? Gautam Shah in his conversation Monday mentioned that he believed the technical trends were set up for a move towards 17,800 and 18,100. It's seemingly prophetic. So what's the trade setup today? To my mind, index will mostly be able to strengthen higher on the backdrop of the recent fall in oil prices. And I think the fall in India VIX to near 21 levels is also supportive of further upside. So no question that there is upside today, and you don't need me to tell you that. The SGX Nifty tells you that. I think what you got to think of is what the nature of the trade could be. So hitherto, people have avoided oil sensitives, people have avoided the high risk trades, the banks. I think yesterday's color showed that there's a bit of a risk on starting to happen in banks, bit of a risk on starting to happen in some commodity plays. The companies which benefit from lower commodity prices. And I think everybody got to focus of whether there is a return to risk on trades out there in that bucket. If indeed the news flow today and tomorrow as well is indicative of the political stress further getting diffused. So that is what you should focus on. What has worked as a template the last few days may not necessarily work. So keep that at the back of your mind. What are the stocks to focus on today? I will watch out for ONGC. All of us will. The OFS happens at a discount, and therefore that stock will certainly start off lower. I think what everybody got to keep in mind is what will happen in the near term. And in the near term, the APM gas price revision will happen. And if the gas price revision is substantially higher, it's great for the earnings for ONGC. Already, I suspect that this quarter's earnings will look very, very strong for ONGC simply because the gas prices from October to March are much higher than the gas prices from October to March last year. The only problem with ONGC is that the production ramp up hasn't happened. But Morgan Stanley is constructive. They were overweight rating with the target price of 263. They of course mentioning this is a 7% discount, but they believe there is an earnings upside with the upcoming gas price hike and tight supplies in oil and gas markets. According to their analysis, ONGC at the current prices is pricing in oil at $60 per barrel, whereas oil is at actually 110, and gas realizations at $4.1 per MMBTU. We might actually see gas at about $6 or $7 per MMBTU. So you factor in about a 50% upside from oil, 50% upside from gas at the very least, and therefore pure earnings should mean that earnings should see a 50% upgrade of sorts on current production, and which is actually the good part for ONGC. So watch out for that. Yes, it'll start off lower. Yes, oil prices are coming off, so upstream companies will be lower. The question is, can earnings now make up for that in the very near term? I think time will tell. Adani Enterprises and Jacob and Reliance Industrial Infra, because Adani Group has achieved financial closure of the Navi Mumbai International Airport. So the airport's business is housed under Adani Enterprises, and therefore that stock remains in focus. And whenever something around Navi Mumbai Airport comes in, Jacob and Reliance Industrial Infra, by virtue of some land bank that they have, I don't even know the quantum really, but the stocks always do well, therefore I'm pointing them out. Keep in mind, if they react today, you know why they are reacting. Adani Enterprises, of course, would have fundamental reasons to react. Tata Coffee and Tata Consumer, both in focus. There is a big reorganization scheme that Tata Consumer has announced. A part of that is that Tata Coffee will merge into Tata Consumer at a ratio of 10:3. And the deal is at a near 13% premium to the current market price of Tata Coffee. So you'll see an uptick in the price of Tata Coffee. Will you see an uptick in the price of Tata Consumer? I don't know. But again, I thought the Morgan Stanley note put it out well, and therefore I thought I'll bring it for you that they are overweight with the target price of 886. They believe that that they are saying that the management believes this reorganization scheme to be 5 to 10% earnings accretive, so which is great. And then therefore, if Tata Consumer also starts off higher, if it does, you know that there's some more upside for Tata Coffee. So keep that math. There's about a 13% premium differential between Tata Coffee and Tata Consumer. Look at those stocks very closely, and you can play an arbitrage as well if you do that daily basis. They say that they like the management's focus on consolidation and simplification of the business structure, and a creation of business verticals, even on tea and coffee plantations, will result in operational benefits. So do watch out for Tata Consumer and Tata Coffee today. Hero MotoCorp has said that they will hike prices of motorcycles by up to 2,000 rupees from April 5th. Remember, this stock has been derated quite strongly on the back of all the recent developments that have happened, non-business, of course, purely on dividend yield. It's trading at a really strong 5% dividend yield. If you believe that Hero can iron out all of these near-term chinks, and it is taking steps to indeed mitigate the input cost pressures, and it can have decent sales, then some analysts believe it could be an interesting stock to bet on. I don't have a view here. I'm just telling you the views of some of the analysts who are mentioning that. Welspun Corp is a stock in focus. They say the unit in Saudi Arabia has won a $132 million order. Maybe that stock reacts. Maybe Escorts, which is corrected now quite a bit, reacts because BofA Securities has downgraded Escorts to a target price of 1,500 rupees. So watch out for that stock. Their reasons, of course, are aplenty. So keep in mind, which is why from 1633, they believe there could be a further 10% downtick. They say that there's a weak cycle and the valuations are demanding. And now that the open offer is behind and that cushion is gone, the stock may correct according to them. The tractor industry volumes have been coming off with YTD volumes down about 6% and Escorts volumes down 14%. And they say that the Escorts has been losing market share as its key market versus some of the others. So keep that at the back of your mind. Motilal Oswal came with that note on Restaurant Brands Asia. They were buy with a target price of 150 for multiple reasons, including the fact that India business, according to them, will deliver strong growth. So watch out for that one. Watch out for the IPL teams and the select media companies because Jayesh has said that the IPL broadcast e-auction will happen in about a month's time or 2 months' time, and therefore all of these companies remain in focus for the next few days, weeks, months. With that, it's a wrap on a very long trade setup. Thank you so much for tuning in today. Stay safe, trade well, and well, maybe trade on the upside.